Good morning, traders. John Caruso coming to you here for September 23rd with your currency outlook for today's session. As we came in this morning, we did see some noticeable weakness in the U.S. dollar. We fell back all the way to 84.46. We have seen that market rally back towards the high. We're sitting right around 84.80 on the session high for the day. We did see yesterday, the U.S. dollar did take out last week's high. Put in a new high at 84.97.5. Actually, that's almost a 1.5-year high in the U.S. dollar. As I look at some of my technical tools, it is showing that we are overextended at these levels. We are going to see some significant resistance, in my opinion, upwards between 85.20 and 85.50. You're going to see some trend line resistance up in that area. So I will look to become bearish on that market if we do see it rally to those levels. From a fundamental standpoint, I believe the market's getting a little bit of ahead of itself on the interest rate move. We did hear from the Feds last week. It was a pretty neutral. The takeaway that I had, it was a pretty neutral stance on interest rates. Everyone talks hawkish, dovish. I think it was pretty neutral. But I think the market is just automatically assuming that QE is ending in October, that we are going to start to see a rise in U.S. interest rates. That's based on a pretty heavy assumption that we are going to see consistent growth throughout the third quarter. In my forecast is we are going to see the U.S. economy, as well as the global economy, start to stall out a little bit coming into this quarter. So I think as far as interest rates go, I believe that's been the major catalyst for the U.S. dollar to move higher. I do think you will see the interest rate markets start to drop off a little bit, which is, of course, going to weigh heavily on the U.S. dollar in the near term. Looking at the euro, inversely, we are seeing an overextension to the downside in the euro currency. We are going to find some weekly support in that market down around 127.70. So I will look to become bullish on that market. Not long term, but certainly short term if we do obtain those levels down there below 128. We did see some more slack in the Eurozone manufacturing data in the overnight. So the trend in economic data continues to be bearish over in the Eurozone, and you probably will see more dovish speeches from the ECB in the next coming weeks. However, I do believe the euro currency is a little bit overextended at the moment. We're trading right around 128.60. So if you'd like to get my piece and take on the rest of the currency markets, feel free to give me a call at the desk, 800-669-5354. Futures and options on futures may involve substantial risk and may not be suitable for all investors.